Hello guys, right, this is an update to my GJ analysis, the first trade of the day, possible trade of the day I think I said, or potential trade of the day. So first off, I was looking for shorts. I mentioned at the end of the video that that's why I'd only put the levels in here. Anyway, watching the price action before potentially entering the trade, I could see it starting to look like it was moving up again, as you can see from these candlestick highs here. And what I should do, remind you to do now, we hadn't broken this low, so as a consequence this was still a valid descending trend line. What we can do now is change the trend line to the highs of these, which would potentially affect that pullback here, and that is a beast of a pullback. That's why GJ is called the beast. So we can redraw that line to there and there, because as I said, this support now has been broken by this move here. And just to update things, so that's what I do throughout my trading day. Move the lines accordingly, and in a moment I'll move this wedge to the low of here. And then we can see how price reacts to that new pattern. So to my trades today, so I had to watch this pulling back, so I decided to start drawing the levels above me that may affect the price, which was this H1 high here and an H1 high which happened to be over here, which I think I mentioned there may be a high going on over there, which I hadn't drawn in. So that's now the trade plan, if you like, for the longs. All we look for is valid reversals. We're watching the indicator to see what it's telling us, and then if it does break through, then we can start to consider going long. Lovely gap there, that would yield a good 15 pips possibly, by the look of it, if my mouse catches up. It's because I've got too many charts open. Yeah, 17.6 roughly, 17. So I need to close a couple of charts down. That's that. And I'll drag my trades on. The first trade, took two trades on this move. First trade was taken, let's put the vertical on the actual entry bar, was taken using, let's have a look, the 15-minute turned red, that's right, and I like the look of that to the downside at that point. Didn't want to miss the volatility of the market. 5 minutes had broken the low of this candle here, low, high, high, low, high, high. Didn't want to miss the move and wait for the close. You can still wait for the close. You would have got the exact same entry here if you'd let it pull back and then considered entering on this candle here. Well, you wouldn't actually, but you would have. You could have entered around that area, but that comes with experience. But M1 would have been the reason for the entry. As you know, when the volatile periods, well, you don't know if you're a novice, but when the volatile periods kick in is when you need to use a tiny bit of discretion and price action. So you've just got to watch the price. I've pulled that across because really we should attach those lows there now, here and here, because it's breaking through the price action here to there. And that didn't quite break, but it doesn't matter because we're lining up this and this, well, stuff further back. So that didn't really affect the entry. What did affect the entry was the push down below the 20. That's right, I disregarded the 5 minute at that stage because we were down. It was telling me, screaming sell. So we'd push down through here, and literally that was my entry as a result of breaking through the 20. So I could have got in a little bit earlier, but you always expect the pullback as a result of the break. So had I entered that one, I wouldn't have got quite such a good position. Plus, it's all about the distance to the next level, and I was trading to this level H4, so that was that trade. I think it was about 8 to 10 pips, can't remember, 11 pips probably net of spread, I think. Yeah, it was about 11 pips, just over 11 pips actually. And then the second trade was placed instantly after the pullback as a result of the first trade. In fact, no, it wasn't. It was here. It's as a result of the break of that. So you can see now how I'm using this histogram to its absolute fullest. Break. That's how much belief I've got in this thing. 20, broke the 20 with vigor. Let's check the 5 minute now. I think that might have added to the decision to go into the second trade. Yep, that's right. Broke that 20 on the 5 minute there. And that was and on my Indy, which I've had for 15 years now, telling me to go short. We'd broken that level now, and you know, this was in a massive downtrend. All the other time frames were concurring with the short trade here, right down to the daily actually, because the daily was below the daily open. Can't really see that, but 2 red daily bars, so definitely bearish. It's turning round to the short side. We can see we've clearly hit some sort of support acting as resistance here now. These 3 bars here. Can't see much behind my lines, but I'm not going to delete any of them. That's my trade plan for the morning, or the day should I say. So H4 concurred as well. It was red below 0. H1 when I entered was red. It's pulling back a bit now, but and changing colour, but that's still not an extreme worry. I certainly do not want to be going long. We're still below. All we're doing really is testing that hourly 8 EMA. So trade 2. I like to make my money when the rest of the market is making their money. I think that's an important thing to remember. So, you know, why waste your life sitting in front of charts when you know the volatility is highly likely to get you into your trades? And this was the target down here. It was the flip area on this stuff here. There's the flip, what I call the flip, the price pivot zone, where the price closed. You can just see the tail of that, the wick, and then you've got this huge wick here. So I mean, these wick zones, call it what you like, price pivot zones, some people call it, I call it a flip zone. They are very imprecise compared with everything else I do with my trading. You know, they are you can afford to allow the price to overshoot. It overshot, not a huge amount, but that's probably 3 or 4 pips my target. So well within the, remember always to add your spread to your target. So if you want 10 pips, you've got to add a couple of pip spread before it'll hit. So rather, if you're thinking of going for 12, cut the 2 pips off. I hope that makes sense. Massive beast of a move to the long side, and that is why this is called the beast. Compare it with cable, which still has some room, and this is interesting as well. This is a little thing I don't mention very often. Cable tends to lead the way to pound yen, but they don't always correlate, and that's just a price action reality. But if you're looking to see how far GJ might go back, check where the cable is in regards to the hourly 8 EMA, and expect potentially GJ to overshoot, because what have I said about that? It's a beast. They move quicker because there's not so much, they don't take so much money to move them. You know, if you can imagine, and this is just a hypothetical figure, Euro US dollar takes $100 million to move it 1 pip. Then cable might only take 500 million to move it 1 pip, and pound yen might only take 50 million to move it 1 pip. So that's how the volatility, that's how I understand the volatility. So whilst this is still going up to test a level of support and resistance, or this arbitrary EMA, it could be 7, 9, whatever, it could be a 10, it won't make much difference to the EMA at all, or an 8, or a 6. So it's used as a rough guide, and as long as you understand that, then it's a perfectly good EMA to use. Why not? Digger uses it and he makes millions. Digger 1 on Forex Factory. So 2 trades, 2 winners for the morning, analysed to the nth degree. As always guys, never trade what I talk about on here. Always just trade your own analysis. This is for educational purposes only. Okay, and we've got our gaps to trade now. This is my daily trade plan. I can go and walk the dog, do what I like, and I can come back to this and have another go, which I no doubt will do. Now we can move that wedge configuration to tie up with the levels I've talked about. This is a what I call a valid descending trend line. This is just this bottom line is an ascending trend line, but it's not what I would call valid because it isn't making higher highs. This is making lower lows. I hope that makes sense. This thing is just attaching 2 areas of support. Okay, that's your price action video analysis of 2 morning trades from me. I hope that helps. Thank you for watching. Don't forget, subscribe and like if you like it. Thank you.